AgriTalk is brought to you by Case IH. Solutions for every challenge, equipment for every farm. Case IH, built by farmers. And by Grounded. Spray smarter and improve herbicide performance with Grounded, a multifunctional adjuvant from Helena. And by Propane. Propane is the energy for everyone, especially farmers. Environmentally friendly propane can fuel most anything on the farm. See how at propane.com. Monday's upside price action in the grains turned into a turnaround Tuesday. Next up will be a test on Wednesday to see if traders are willing to buy even a short-term dip in the market. Live cattle turned Monday's losses into solid gains, and lean hog futures traded to the downside. Even cotton futures were under modest pressure in today's trade.
Live from the Superest Tuesday of them all via Farm Journal broadcast, this is AgriTalk. This afternoon, we'll chat with Brian Hoops from Midwest Market Solutions, and directly following the news, Brian Splitt from agmarket.net. I'm handsome newsman Davis Michelson, and now, here's the host of AgriTalk, Chip Lowry.
The Superest of the Super Tuesdays, huh?
That's right, the Superest Tuesday of them all, my friend.
Wow. Wow, that is impressive. What is it, 15 states and...
one territory, yep.
And one territory with the primaries today?
It's American Samoa, I think it is.
Right.
Yep.
Yeah, so a lot of primaries, a lot of decisions being made at the state level today, and we're going to find out the fate of candidate Haley and whether or not she will decide to continue to run. Davis, have you even seen, is she favored in any of the states?
I can neither confirm nor deny. I don't know.
Right. I haven't
seen anything. Yeah.
I don't believe she is, and this could be kind of the final straw, and clear the path completely then for former President Trump and a nomination for the GOP president this fall. Wow.
Yeah, this fall.
We're taking another step closer to Biden versus Trump again, aren't we?
Yeah. Second verse, same as the first.
Same as the first. Yeah, interesting. Welcome to AgriTalk. Glad that you are with us on this Tuesday afternoon. We're going to have a conversation with Brian Hoops from Midwest Market Solutions. Always look forward to those conversations. We're going to touch them all. I'm sure that we'll hit most of the markets in the conversation today. And we've got Brian Splitt. Brian, I would assume, is going to take a look at the charts in the grain markets here as we make our way into the middle of the week. All right, buddy, let's get to the news. What do you got?
Well, Chip, adequate supplies of wheat around the globe are making it difficult to establish upside momentum in wheat futures. The weather forecast for major exporting markets is also pointing to more than adequate supplies in the year ahead. May soft red winter wheat futures opened fractionally lower and tried to move to the plus side of unchanged, but futures accelerated the price slide on the fall through 560, with May SRW dropping to a new contract low below 550 before the end of the day. July HRW wheat futures 9 1/4 cents lower at 557 3/4. July SRW wheat down 11 1/2 to 555 3/4. July spring wheat closed at 657 1/2. Chip, that's down 5 1/4 cents today.
Every time we talk about the corn market, the wheat market, the soybean market, it's about the supply side of the market at this point, and it's just a wet blanket. And I don't know if it's any more true in any of the markets than it is in wheat. This wheat market is just having a difficult time dealing with global supplies right now.
May corn futures saw a high range open and a low range close while posting an inside trading day. Neutral weather for much of Brazil has stabilized first crop corn production and improved conditions for the safrinha corn crop. Crop watchers warn there is still a lot of the growing season left for the safrinha corn crop, and a trend back to hot and dry could send more demand to the U.S. near term. Market watchers continue to look for confirmation that China was buying U.S. corn last week. May corn futures today were 3 3/4 cents lower, 426 1/4. July corn down 3 3/4 cents, 437 1/2. December corn futures closed at 459 1/4, down 3 3/4 cents. Chip.
Yeah, we could see some evidence of the Chinese buying in Thursday morning's weekly export sales report. Evidently, somehow, some way, if they were buying last week, they were buying in a way that it did not have to be reported through the daily export sales reporting system.
May bean futures slipped back below pivotal 1150 late in the session. Traders' willingness to lean on prices below the 1150 level suggests professional trading funds are still willing to defend short positions in the bean market. Traders will be looking to the Brazilian bean crop estimate in Friday's supply and demand report from USDA. Pro-farmer crop consultant Dr. Michael Cordonier left his Brazilian bean crop estimate at 145 million metric tons this week, and he maintains a neutral to lower bias for the Brazilian crop. May beans were 6 cents lower at 11.49. July beans down 6 1/4 to 11.59. November beans closed at 11.44 1/4. That's down 2 cents today.
Yeah, and when we take a look at the product markets, May soybean meal today down $3.60. Soybean oil May contract down 13 points. So no help from the products today.
July cotton was 30 points lower today at 93.07. On the livestock side, April fat cattle futures matched support at yesterday's low, then bounced to end the session mid-range. Traders are looking for direction from the cash market, but April futures are clearly locked in a sideways trading range between 185 and 190. April live cattle today, 132.5 higher, 188. June futures jumped 95 cents to 183.52.5. April feeder futures up $1.42.5 to 257.17.5. And on the snout side, April lean hog futures opened steady and near session highs, then fell to test support just under the $85 level. April hogs $1.10 lower today, 85.17.5. The June contract down 52.5 to 101.60. Chip.
All right. Thank you very much, Davis. Let's bring in Brian Splitt from agmarket.net. How you doing, Brian?
Doing fantastic, Chip. What's up with you?
Well, I'm looking at this new contract low in the SRW market, some pressure on the HRW market, and I'm wondering if wheat isn't trying to be a leader to the downside in here again.
Well, it appears to be. I mean, this is the only one that's made some new contract lows. That SRW made new lows today and took out the February low, so that's not a good sign. We're hovering right above the lows in the hard red wheat. And spring wheat had a little bit of life here yesterday, was leading to the upside, but again, we're not very far from contract lows there. So wheat is not the bright spot. We talk about corn and
Yep.
goods and bads there. We did see the funds cover quite a few short positions on that commitment of trade report, but the report comes out on Friday. It's as of the close on Tuesday. So the data we got Friday was as of the close on the 27th. We had settled at 423.5. Well, the previous week we settled at 432.5. So the market actually went down as the funds were covering shorts.
Right.
And that shouldn't be a surprise. I mean, just because of the timing, we knew there was a lot of physical bushels that were being priced in that time frame. The funds know that. That's why they were covering into the producer selling. That's been a well-advertised event that was going to happen as we got into delivery of the March contract. But also, if you look at behavior in previous commitment of trade reports, when the funds are really short, the futures market struggles to go up in that first round of short covering from the funds. Sometimes it'll actually make a new low as the funds are into their short covering event. It's not till the short covering is more mature that we start to see the futures go with it. We're right on track with 2014. In last year, we talked a lot about 2013, 2023. Your crop insurance values in 2014 were 462 and 1136. We're 466 and 1156 this year. Pretty much the same exact spot as a decade ago, and that gives me optimism that there could be some upside this spring.
Good stuff, man. And watching what's going on with the commitment of traders and the fund positioning, I think is going to be very interesting over the next couple of weeks. Great stuff, Brian. Thanks, man.
Thanks as always.
All right, Brian Splitt, agmarket.net. Up next, Brian Hoops, Midwest Market Solutions, here on AgriTalk.
My mom's got a new Case IH tractor, and it can do it all. Bale hay all day. See in the dark with its powerful LED lights. Hook up all the implements. Shift like a race car. Steer with ease. And it can also cool my juice box. Yeah, her Case IH tractor can do everything she needs it to.
Looking for a tractor that can do it all? Check out caseih.com.
Go on the offensive against weeds with Antares Complete from Helena. Antares Complete eliminates early weed competition with long-lasting residual control of broadleaf weeds and grasses. With a balanced premix of 3 herbicides, Antares Complete combats herbicide resistance and helps soybeans achieve a faster, more vigorous start to the season. Take a tactical first strike against weeds and protect your soybeans early with Antares Complete. Always follow label instructions and check registration before use. Contact your Helena representative to learn more.
From powering irrigation engines to warming buildings, propane has always been a part of American farm life. Now, you can be a part of propane's future and save money at the same time. The Propane Farm Incentive Program is a research initiative that provides farmers up to $5,000 towards the purchase of new propane-powered equipment. In exchange, participants share performance data to make tomorrow's ag operations more cost-effective, more efficient, and more environmentally friendly with propane. Getting started is simple. Visit propane.com/farm incentive to see if you're eligible.
You're listening to AgriTalk, where the conversation begins. Join us at 855-4-TALK-AG.
Welcome back to AgriTalk. Davis, get this.
Yeah.
I just announced it. Well, it was announced before the top of the hour, but getting the details, I had to text Wiesmeyer on it. Arizona Senator Kirsten Sinema, an independent, says she is not running for re-election.
Oh. Okay.
Yeah. So that is going to leave it to Carrie Lake and Ruben Gallego.
What am I going to do with all these cinema buttons?
With all the
shoot.
All the cinema buttons that you've got?
Gross. Yeah.
Yeah. Basically what she said is it's interesting. She said, I believe in my approach, but it's not what Americans want right now. I love Arizona, and I'm so proud of what we've delivered because I choose civility, understanding, listening, working together to get stuff done, and we'll leave the Senate at the end of this year.
Wow. Wow.
It's part of what we've been talking about for quite some time. There are those that are in a position to be a leader in this country that are going to look at you're either wrong because you did too much or not enough on an issue, or you're not really a Democrat, or you're not really a Republican because you were willing to compromise. And I don't know that much about cinema, but there she is saying, listen, that's the way I like to do it. And I'm not very much in favor in America right now. So out of here.
Well,
I'll see you later.
The private sector welcomes her with open arms.
I'm sure it will. Either that or the retirement community, because because she had a campaign purse filled with more than $10 million. Now, to a lot of people, $10 million might not sound like much. To old Chip here,
yeah, that's plenty.
I could live pretty comfortably on that for the rest of my days, okay?
You and me could split that, and you'd never see us again.
You darn right. You darn right. All right. Welcome back. Let's get to the conversation now with Brian Hoops, Midwest Market Solutions. How you doing, Brian?
Hey, Chip. I'm good. How you doing, sir?
We're doing all right. All right. Narrowing up the Senate field for this fall, and all you got to do is sit back and wait for them to drop out. That's all you got to do now.
Hey, it's that time of year. Right? Now, aren't you a big Iowa Hawkeye fan? Because I have a question for you.
No. I am a Hawkeye. I will watch the Hawkeyes, but I'm a Cyclone.
You're a Cyclone fan. I thought you were Hawkeyes and you were on the Caitlin Clark bandwagon, because it seems everybody's watching everything she does these days.
Oh, yeah. Oh, hey, I'm not saying that I'm not watching what Caitlin Clark is doing. I am human, after all, Brian.
I've never really watched.
This is pretty incredible,
basketball.
Isn't it?
It is. I've never really watched women's basketball that much, but this year it's pretty incredible what she can do. It's just amazing. Yeah.
Yeah, it certainly is. Certainly is. Yeah. My wife and I are big basketball fans, including women's basketball. We've been watching the Hawkeye women's basketball team for for several years, but there's one day that we don't root for them. One day game every year, and that's when they're playing the Cyclones, baby.
I hear you. I got you.
All right.
I'm a Gophers fan, so
yeah.
Go Gophers.
Yeah. Well. Okay.
My son works for them, right? My son's a broadcaster. He broadcasts the Gophers, so you got to go for the Gophers.
Gotcha. All right.
You didn't know that?
I do like that. I like that. Okay, buddy. Let's get on to this and figure out what's going on in the markets. And let's start with corn, because I'm sitting here looking at this sideways trade around the 440 level in the July contract. It kind of feels, Brian, like a market that's committed to going nowhere.
I think we've had a little bounce off of our lows here, and now we're running into some overhead resistance, probably around the 443 area. If you want to really look at a chart real closely, we've kind of knocked our heads on that area about every day in the last 5 sessions. We've kind of touched that area and haven't really been able to move above it or below it appreciably. We came off our lows, which is encouraging, and it's a 20-cent rally. And now we're kind of set here with the funds covered some shorts. Now what? Now what happens? What's the next step? And to really answer that question, you have to look at, is there going to be a reason for fund traders, fund managers to cover additional short positions in this marketplace? Now, right now, there probably isn't. There isn't that weather threat on the horizon in either Brazil or in the United States or Argentina for that matter. But at some point, it certainly could happen. There's over 75% of the corn crop has now been seeded in Safrinha. That's the biggest crop that they grow. 80% of their entire production is this crop that's just been put in the ground. So you change the forecast in the next 10 days, it gets hot, gets dry, we can move higher. And you go out into the summer, we could move sharply higher because of this huge short position that the funds are still holding.
Yeah. Brian, that's the thing about the Safrinha corn crop. If we get a forecast for some hot and dry conditions on the Safrinha corn crop, it will impact our market, and probably in a positive way. We are heading into their hot and, into their dry season. I would think the odds that we're going to see a quote-unquote hot and dry forecast for that Safrinha corn crop are pretty good, aren't they?
I would have to think at some point we're going to see some sort of a forecast like that, and I think it same bodes for the U.S. markets. We know it's going to get hot this summer. The question will it be dry along with that for an extended period? So, I mean, if you're a producer who's maybe made cash sales earlier this fall, maybe off the combine, or we've had clients that had basis contracts that rolled over from February to March, and they were kicked out of those contracts, so they came back in and re-owned them, re-own those with futures and options. If you're one of those producers, I think you really have to look out into the summer and anticipate what you said could have some hot and dry weather in Brazil. The growing season in the U.S. is always uneven. We have sometimes a delayed planting time frame. Sometimes it just doesn't go perfectly. The summer's always going to be hot. Go out and buy these September corn calls. Maybe you could do some call spreads where you buy a call, sell a call, something like that, and sit on these calls and know that here in the month of March, it really doesn't make a lot of difference what we do, but what happens in the summer, you're going to have these calls protected, and you go all the way through the end of August with these options. So you got plenty of time. They're not super expensive as far as volatility goes, and you can get yourself established back in a long position into the heat of the summer and the growing season.
Okay, just to be clear on what we're talking about here, is that on sales that have already been made, or are you saying let's go ahead and move some cash grain and replace it with a call spread or something like that to move that risk away from the physical?
Well, I would prefer that this is all grain that you sold. We've been talking all harvest about everything should be sold or hedged, because you don't want to have stuff unprotected this year because of what potentially has happened. We thought it could happen. The market was telling you there's 60 cents of carry from December to July corn. There's no way you can store the crop and try and make that carry. You have to sell that carry. And so hopefully producers did that. If they didn't, and they're forced to make cash sales now, step in and re-own them now. But I'm not advocating making sales down here because it looks like we're probably trying to carve out at least a temporary bottom in this corn market. I don't know how much higher we're going to go without that weather threat, but at least here for the near term, we should have, I think, at least a little bit of a low in place. You look ahead to the end of the month, we're going to drop corn acres this year, most likely a couple million. It probably puts us, this floor in this market here at those lows that we made a week ago.
Okay. All right. Fair enough. Same kind of thought process on soybeans in here?
I think so.
Okay.
I don't think there's quite as much optimism over the soybean market. You look at, you don't have the same growing pattern in South America.
Right.
The crop is being harvested in Brazil. Argentina's getting harvest done. They're not planting another soybean crop that would be susceptible to a drought. The corn crop's the one that is that susceptible right now. But in the U.S., the same pattern applies to soybeans. We could have something happen during planting, but most likely it's going to happen during the growing season where we have extreme heat, lack of rainfall in some part of the country that could give soybeans a big rally. Because if corn's going to take off and rally, soybeans are going to follow along with them.
Right. Okay. Yeah, this is we are setting up for an interesting year, and there some crop watchers right now, Brian, are more than willing to talk about the dry conditions that we've got out here and say, listen, it hasn't been this dry across the Midwest since March of 2012. While that might be factually correct, I don't know if the weather forecast and the patterns are all going to line up like what we had in 2012 or not. But it doesn't change the fact that we're dry in some critical areas, and if you are moving product, you maybe need to maintain some flexibility in your strategy with those call option spreads. I kind of like that a lot. All right. Brian Hoops, Midwest Market Solutions, right here on AgriTalk.
Let's go to the markets page at profarmer.com and check today's closes, where July HRW wheat futures were 9 1/4 cents lower at 5.57 3/4. July SRW wheat down 11 1/2 to 5.55 3/4. May corn futures were 3 3/4 cents lower at 4.26 1/4. December corn futures closed at 4.59 1/4. That's down 3 3/4 cents today. May soybean futures were 6 cents lower at 11.49. Novi beans closed at 11.44 1/4. That's down 2 cents. July cotton was 30 points lower on the day at 93.07. On your livestocks, April fat cattle 132 1/2 higher, 188. April feeders up $1.42 1/2 to 257.17 1/2. And April lean hog futures $1.10 lower today, 85.17 1/2. Get more market news every market day. Visit tryprofarmer.com.
Go on the offensive against weeds with Antares Complete from Helena. Antares Complete eliminates early weed competition with long-lasting residual control of broadleaf weeds and grasses. With a balanced pre-mix of 3 herbicides, Antares Complete combats herbicide resistance and helps soybeans achieve a faster, more vigorous start to the season. Take a tactical first strike against weeds and protect your soybeans early with Antares Complete. Always follow label instructions and check registration before use. Contact your Helena representative to learn more.
From powering irrigation engines to warming buildings, propane has always been a part of American farm life. Now, you can be a part of propane's future and save money at the same time. The Propane Farm Incentive Program is a research initiative that provides farmers up to $5,000 towards the purchase of new propane-powered equipment. In exchange, participants share performance data to make tomorrow's ag operations more cost-effective, more efficient, and more environmentally friendly with propane. Getting started is simple. Visit propane.com/farm incentive to see if you're eligible.
My mom's got a new Case IH tractor, and it can do it all. Bale hay all day. See in the dark with its powerful LED lights. Hook up all the implements. Shift like a race car. Steer with ease. And it can also cool my juice box. Yeah, her Case IH tractor can do everything she needs it to.
Looking for a tractor that can do it all? Check out caseih.com.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. On your favorite radio station or your preferred digital device, AgriTalk is live every weekday.
Life is a gamble, a game we all play, but you need to save something for rain.
All right, welcome back to AgriTalk. I'm Chip. Glad you're with us. We are in the middle of a conversation with Brian Hoops from Midwest Market Solutions. And, Brian, we've talked a lot about the supply side of things. Talk to me about the demand side and ethanol in particular with corn. I want to go there because is corn for ethanol demand, it's doing okay, isn't it?
I think it's doing fine. Yeah, it's the real bright spot as far as demand for corn goes. Our exports they've been okay, not outstanding, but they're okay. But ethanol is the one that really has done as well or better than anything this year and will continue to. So we're not breaking records. We're not going to outpace the USDA forecast. We're going to meet the USDA forecast pretty handily this year. Okay. So yeah, it's there. It's good. It's I think it's pretty much what has been expected this year. We're not seeing much in the way of any surprises out of the ethanol equation this year.
Okay, for so long demand, and I mean the combination of domestic and export demand on corn was a drag on the market. Are we past that?
Yeah, I think so. I mean, I think we pretty much have our baseline established for corn demand for this year. USDA could cancel. I shouldn't say USDA. Some of these private companies have purchased corn from the U.S. They, of course, could cancel. We're going to see that in soybeans. In fact, in soybeans, we've seen that over the last 2 weeks. 2 weeks ago in our export sales, the unknown destination category, which had been booking a lot of soybeans this year, canceled 21 million bushels. Last week, they canceled over 14 million. We haven't seen any corn cancellations yet, and I don't suspect we will. The bulk of our corn sales this year have gone to Mexico. And a lot of the inspections report that comes out on Mondays, we've seen a lot of that product already shipped and down into the Gulf. So I don't suspect we'll see anything like we're going to see in the soybean market where we may see additional cancellations. But, the one thing is prices have dropped off here now where we're at these year lows for soybeans. They're not going to cancel prices probably at this price level. But if we end up rallying sharply, maybe we'll see some more cancellations. I don't think that's going to happen.
Okay. Well, on the soybean side of things, the importers certainly seem comfortable with getting what they need out of Brazil at this point, correct?
Yes. They've, their harvest is ongoing in Brazil, and they're getting some out of Argentina as well. So right now they're getting enough to meet the demands of the countries that they need this product, and so plenty of supplies. And that's a big difference between what we saw last year and what we're seeing this year. Last year we had that drought in Argentina. It affected the corn crop. It affected the soybean meal. So our exports, we didn't see those cancellations. We saw a lot of exports in the last half of this marketing season. We're not going to see that big surgence this year because there is big crops coming out of Argentina and Brazil of both corn and soybeans. We're not going to see a big increase for U.S. demand as to go into our spring timeframe.
Okay. Talk to me about the long-term outlook on the soy complex, Brian. What's your attitude there?
I think we have to be really, really defensive on the soy complex from the standpoint that we are increasing the size of our U.S. ending stocks. Our balance sheets are increasing because of this slowing demand that we're seeing. We're seeing those cancellations that I mentioned, and that just comes back into our bottom line. So we're seeing ending stocks increase. We're looking at probably close to 320 million bushels in this report, and we could see that swell to 335, 340 by the April report, as I don't think our exports are keeping up with what the USDA has forecasted us, and they may have to reduce that export forecast at some point down the road. So you combine that with the fact that we're probably going to plant a few more soybean acres this year, maybe a little bit less corn, and we're looking at, building supplies of soybeans. Our ending stocks levels are starting to build, and they probably will build in subsequent reports as well, unless we go back to that supply reducing type of weather scenario, either
Gotcha.
here in the U.S. or South America.
Okay. All right. We've got some reports coming up. I want to get your thoughts here. At the end of this week, we got the WASDE, the supply and demand report. First place you're going in that fresh set of numbers.
Yeah, the report, I don't think it's going to be real exciting, but I want to look at what's happening in South America first of all, and because that kind of is going to be the tipping point for what happens to U.S. We do expect corn ending stocks to be down maybe 20 million from last month, soybean stocks and wheat stocks unchanged to just slightly higher. But what happens in South America? USDA increased yield expectations for soybeans in Brazil last month, a major surprise that caught everyone off guard. If they do that again this month, that would be a surprise, certainly. But we expect that they will lower yields, and we're going to see how much they're willing to lower their yield numbers. How much are they willing to lower corn yields? If there are some big drops there, that will eventually translate into tighter ending stocks for corn and soybeans here in the United States. But I'm kind of skeptical that that's going to happen from the government, this report.
Okay. On corn, in anything that you're looking at specifically there?
Well, in this report, probably not. We're going to see, I think, a yield number for the corn in Brazil smaller than last year. The average trade guess is about 122 million tons. The USDA is right at 124. Last year they were 137. So it's a smaller crop, but a couple million tons there is going to be offset by Argentina almost doubling the size of their crop compared to last year. They're going to be probably around 55 million tons versus 35 a year ago. So much bigger crops out of Argentina. I don't think this report has much in the way of excitement for the corn market other than Brazil's corn crop being decreased slightly. As we get to the end of the month and we start talking about the plantings intentions report, that's where everybody's going to be looking for what happens with the corn. And do we plant less corn acres compared to a year ago? And if so, how much less?
Right. Okay. Prospective planting report at the end of the month. The lean is up on beans, down on corn. I'm not going to ask you to argue about that. Just how much up and how much down?
That's a question. And in this year, it's a little bit different report because it's coming out on a Thursday instead of a Friday like normal, because the 29th is a Friday, and that is Good Friday, which the markets will be closed at in observance of the Easter holiday. So the report's actually on a Thursday this year, the 28th, a little bit earlier than normal. If one thing that's happened, we've seen, the cotton market really scream higher through the last several weeks. There's a good chance producers in the Southern Plains are going to plant a little bit more cotton and a little bit less corn is in reaction to that price. If that happens, and which I think it probably will to a small extent, we'll probably see, a couple million less corn, maybe 2.5 million. It will be nice to see 3 million less corn, but something, I think we really need something to kind of catch the trade's attention. If we see 4 or 5 million less, that will certainly attract a lot of buying interest in the corn. Of course, there's an inverse reaction because we're going to plant more soybeans because of that, but it will at least ignite the corn market for a time being.
Right. Yeah, the 178.5 combined corn soybean acreage tally. If we're anything south of that, I think one of the markets is going to be a positive coming out of that report. So something to watch there without question. Let's jump over to the livestock trade and the cattle market, Brian. April live cattle, good grief, hanging in that 185 to 190 range and not acting like they want to really break it down at this point.
No, we've kind of traded in a little bit of a range between like 185.50 up to 189.30 or so in the last several weeks. And the cash trade has come up a little bit. We're trading maybe 183 in the Southern Plains. Typically this time of year, there should be about a $2.50 spread between cash and the futures. So right now, April cattle, fully expecting the cash trade is going to come up at least $1, maybe $2 this week. We haven't seen any cash trade. We haven't seen bids or asking prices yet. this week either to speak of. But boy, that futures, the funds are in there piling on to the long side. They couldn't wait to get out of the market when the trend broke in September and into October, November.
Yeah, that's right.
Ever since then, they just can't get enough of these cattle contracts, and they just keep pushing things higher. So we're kind of stalled out in this area because the cash is stalled. I do think there's better times ahead for this cattle market into the summer. We get into the third, fourth quarters, should be a very good time frame for this cattle market. But at the same token, once we get cattle prices up into that 190 and above, what happens to the consumer demand at those price levels? Well, if you're, the more affluent consumers that are not borrowing money on their credit cards at high interest rates, or car loans at high interest rates, they'll probably have money invested in CDs or some interest-bearing accounts, T-bills or something. They're actually earning interest at these high rates. They can afford that higher end of stakes. And I think that type of consumer demand will be there. But the average consumer out there that wants to budget, that has an effect on the interest rates, they're paying credit cards or car loans, and those interest rates affect their bottom line. They're probably going to back away from those higher priced beef and turn to some ulterior protein source.
Gotcha. We're up against some resistance in that contract, some gap resistance right at the 190 level.
Yes.
Do you feel an urgency to get some coverage in place?
I think for the short term, I think a guy should have something in place here just in the short term. I really like doing these put call spreads where you buy it at the money or in the money put, sell something $10, $12 out of the money, and build yourself a window, because we're going to probably trade within that window rather than just trying to pick a point here and hedging this market at these price levels.
I like that too. I like that. All right, Brian, good stuff, buddy. Thank you. I appreciate you.
Thanks, guys.
All right.
Take care.
You bet. Brian Hoops, Midwest Market Solutions. Davis and I will be right back to wrap up today's AgriTalk.
My mom's got a new Case IH tractor, and it can do it all. Bale hay all day. See in the dark with its powerful LED lights. Hook up all the implements. Shift like a race car. Steer with ease. And it can also cool my juice box. Yeah. Her Case IH tractor can do everything she needs it to.
Looking for a tractor that can do it all? Check out caseih.com.
Go on the offensive against weeds with Antares Complete from Helena. Antares Complete eliminates early weed competition with long-lasting residual control of broadleaf weeds and grasses. With a balanced pre-mix of 3 herbicides, Antares Complete combats herbicide resistance and helps soybeans achieve a faster, more vigorous start to the season. Take a tactical first strike against weeds and protect your soybeans early with Antares Complete. Always follow label instructions and check registration before use. Contact your Helena representative to learn more.
From powering irrigation engines to warming buildings, propane has always been a part of American farm life. Now, you can be a part of propane's future and save money at the same time. The Propane Farm Incentive Program is a research initiative that provides farmers up to $5,000 towards the purchase of new propane-powered equipment. In exchange, participants share performance data to make tomorrow's ag operations more cost-effective, more efficient, and more environmentally friendly with propane. Getting started is simple. Visit propane.com/farm incentive to see if you're eligible.
When news breaks, the newsmakers talk about it on AgriTalk with Chip Flory. Welcome back to AgriTalk, everybody. Your pal Davis Michelson here with Chip Flory, of course.
Yes.
Of course. I
am here.
Okay, very good.
All
Very
right.
good. Good conversation with Brian Hoops there. We're in an interesting spot here. He made a lot of really good points about this upcoming report and what would need to happen. He started at the point, well, corn looks like it kind of wants to make a floor here, maybe not a long-term floor, right. A little plateau, perhaps, a stair step, if you like.
Okay.
Just a lot of things floating around out there, and it felt like, and maybe not, kept kind of hinting back at acreage. An acreage decline may be necessary here in the corn.
Oh, yeah. Yeah, and the attitude is that it's going to be down to at least 92 million acres from last year's 94.6, I think is what it was. So USDA showed us in its Ag Outlook Forum a 91 million acres on corn. Of course, we got to wait until the end of the month on this. Well, close to it, the 28th. And in the meantime, we're going to learn a lot more about what's going on with the South American corn crop. It's only it's only the 5th of March, right? Is that right? Yeah. It's only the 5th of March. There's 3 weeks between now and the prospective plantings report. And in that period of time, I'll bet we have at least one. Look out, here we go. The forecast is turning drier for the Safrina corn crop areas in Mato Grosso and Mato Grosso do Sul. It might be worth a little bit of a scare. A little bit.
Okay.
But you've heard me say, how many times have you heard me say, rethink what a rally is? It used to be not that long ago that the markets were set up in such a way that a springtime rally could be 70, 80, 90 cents in corn. A springtime rally in corn this year, because of that 2.5 billion bushel corn carryover number that's out there, 35, 40, 45 cents might be all it takes to consider it a rally in corn this spring.
Mm-hmm. The other thing that concerned me, now I do want to get to the heavyweight choice box beef market. I know you've got some thoughts on that. Yep. But the other scary thing that he was talking about, I hadn't thought about, soybean export cancellations.
Yeah.
You want to see people get unfired up about soybeans, maybe cancel some export bookings.
Yeah.
Eh?
Yeah. Oh, boy. You got that right. And some of this is bookkeeping, but some of it is a cancellation. Sure. And, when it's sold originally to an unknown destination, the unknown destination has to cancel it and needs to be transferred over to the destination. So there's some bookkeeping issues involved here. But Brian's not wrong in the fact that we are going to have to pay very close attention to it. And Ted Seifert talked about it yesterday, too. It basically said we've got about 6 million tons that are on the books that still need to be shipped. That's not a huge total at this time of the year. That the ports should be more than capable of handling that. It's just a question of, do the importers really want it, or are they going to be looking to supplies out of South America?
The other thing was he's got better times ahead for cattle, is what Brian Hoops said. Let's look at choice box beef. Chip, how's the consumer feel about choice box beef prices?
Right, and that I think is where the resistance to beef prices is going to be reflected first. Of course, the wholesalers have got a pretty good idea of how much beef is moving at what prices, and the retailers do too. And if things start to slow down, and when we're here at the 305 to 310 level, as long as movement stays okay, like this morning, I thought, now the heavyweight choice box beef market was down $1.14 this morning to 305.16, but movement was good, 79 loads. So, I'm not going to complain too much about that. The 306.30 that we printed yesterday in the heavyweight choice boxes was the high of the previous week. We've got a 5-day running simple average of 304.11 in the box beef. I don't think that those are high enough at this point to really create a lot of angst in the beef demand picture. We get into the 310 area, then let's watch the volume very closely. Then let's watch what the wholesalers and the retailers are doing, and what it all means going forward. And I'm not exactly sure what this early Easter is going to mean for beef demand either. It's another twist in this market going forward. But boy, we cannot forget that the April contract, 199.82.5, is the contract high in April live cattle futures.
Yeah.
199.82.5, and here we sit at 188. The fundamentals are not that much different than what they were when we were at 199.82.5. It feels like we get that close above. Let's get the specific date in here. We get the close above the October 20th low at 190.27.5, and you better look out. Feels like that market could run and run hard to the upside.
I'd love to talk more about this, but the weather forecast is updated.
It is.
Yeah.
Thank you.
You bet.
March 5th. This is for March 11th through the 15th. We've got above normal temperatures expected over most of the country. You've got some near normal temperatures in the far west out in the mountains, and then down in the southeast, mostly Florida. And then we've got above normal precipitation expected over most of the Corn Belt. Near normal precip expected in the northern three-quarters of Minnesota, northern South Dakota, and North Dakota. Otherwise, we're looking at above normal on temperatures and precip. All right. Thanks for listening today. Come back tomorrow morning. Jim Minter from Purdue University. Farmer Forum with Joe from California and James from New Mexico.